Hey guys, in today's video, I'm going to discuss one of the most common questions I get asked about technical analysis. I'm also going to explain why having a trading philosophy is extremely important to your trading success. If you guys are brand new, my name is Akil Stokes. I'm a Forex trader. I'm a trading coach and co-founder as well at tier1trading.com. And this is a weekly video that I put out to you guys, usually giving you some trading tips and also showing you some of the best trading opportunities that are on my radar for the week ahead. Now, I've got a jam-packed weekend. I'm completely booked, so I don't have time to wait until the markets close. So instead of digging into newer trading opportunities that are on my radar, I wanted to share a lesson that we did in my live trading room the other day, which in my opinion is going to be more important than any type of setup I can show you. There are two types of traders that typically watch this video. There are the ones that want to know what to trade and the ones that want to learn how to trade. The ones that want to know what to trade, they're looking at this as a shortcut video where they can come in and get some trading ideas and just copy what I'm doing or whatnot. The ones that want to learn how to trade, yes, the technical analysis is important. Yes, the trading ideas are important, but those trading ideas are just in support of the overall lessons that we're trying to preach here, whether it's about the business side of trading, whether it's about the psychological side of trading, or whether it's about the technical side of trading. And if you're in that second camp, I think you're going to really love this video. Now, before we get started, we are going to dig into some technical analysis. If you are brand new and you're not familiar with my principles and my philosophy on identifying trend and how to read a price chart, I recommend doing this one thing because this video is probably going to go over your head. So you can pause it after I finish this statement. You can watch it later. I recommend getting on our website, signing up for the 14-day risk-free trial membership. Risk-free means that you don't get auto-billed or thrown into any type of subscription, anything like that. It just means that you have 14 days on the platform to take advantage of the content that we have available. And then after that 14 days, boom, your membership is done. You lose access. But in that trial membership, you get access to a bunch of awesome stuff. Some of those awesome things are going to be training courses, and there are 3 training courses that you can watch. Now, the very first one, the Emergence course, there's a really good lesson or set of lessons on the basics of technical analysis, how to read a price chart. It basically shares my philosophy on how I read things, how I interpret things, how I understand violations or reversals, stuff like that. If you watch that first, or if you're at least familiar with those concepts, it's going to make watching this video a lot easier. Now, if you're someone that is familiar with those concepts, you can just go right along. You still take the trial membership because there's awesome stuff there for you, but hopefully you should be able to understand the concept that we talk about in this video. Because what we're going to talk about in this video is a common question that I get about technical analysis, and it's one of those questions where if you're not set in your rules, you may start to question your rules. Because in general, right, I'm a rules-based trader. I believe in rules-based trading. My mentors taught me that. I think it is the only way to be consistent in the market. Now, rules can be tight, rules can be loose. That kind of depends on what level of trader you are. Typically, a newer trader starts off with very, very strict rules because you don't really trust yourself too much. And then as you get more experience, as you kind of earn intuition, those rules start to loosen up. And it's not that the rules don't loosen up, but you kind of give yourself more outs in your rules to have more freedom. And that's okay because you've earned that right. But the centerpiece of rules-based trading starts with having an overall philosophy on the market. And an overall philosophy can be many things. The market is more likely to trend until it ends. You believe in indicators. You believe in price action. For me, structure is really the foundation of my trading philosophy. I like to call it the spine. It's the thing that holds everything else together. So every decision that I make in the market has to deal with structure. Where am I looking to get involved in? Has to deal with structure. Where is my stop placement going to go? Has to deal with structure. Where are my targets going to go? Have to deal with structure. So structure is a very important piece of the puzzle for me. And because of that, I have very strict rules for how I interpret a price chart when it's at a level of structure. Now, I'm not saying that your philosophy has to be the same. Again, it could be whatever you want. But what's important, and the message that I hope you get from this video is that if you have a philosophy, if you value something, it really takes away the gray area of trading because you know exactly why you're looking for what you're looking at. It's the difference between me asking you the question again, hey, random, insert your name here, right? Why are you looking for a trade at this area? And you're like, well, because it looked good, right? There's no value in that. You're kind of just recklessly gambling and you don't really know why you're doing what you're doing. Versus if I asked a seasoned vet, hey, why are you entering this trade at this level? Oh, it's a previous level of structure. We have support. RSI is this, right? There are strict reasons. They know exactly why they're looking for what they're looking for. And because of that, they have more belief. Because of that, they have more confidence, more conviction. And those are all the things that stop us from making psychological mistakes. And of course, rules is what keeps us consistent. So I didn't mean for this rant to be this long. So I'm going to get on to another rant when I show you this recording. But I wanted to get those points across because I think they're very important in just developing as a trader. And do me a favor, if you're a veteran trader watching this video, for the new ones out there, do me a favor, type in the comment section below this video, maybe something about your journey, how you went from thinking one way to thinking another thing, or your philosophy, what's important to you in the market. The more ideas we can spread in this comment section below, the more that our newer traders can see it and kind of get an idea of, hey, I don't have to necessarily do things Akil's way, right? Meaning specifically value what I value, but here are some options of what I may want to look into when it comes to setting up my trading philosophy and deciding what I value in the market. All right, so we're going to hop into the video now. Before we do me a favor, before you guys forget, hit that like button. It's the best way you can support the show. I have a goal to reach 50,000 subscribers on this YouTube channel by January 1st, 2022. And I need your guys' help to make it happen. So hit that like button. Again, leave me a comment if you have any questions or comments about anything in this video or anything in general. You guys know Jason, Grayson, and myself, we go through all the comments, and many of those subjects become episodes of either the Trading Coach podcast or the Trader Coffee Break. And of course, share this with your social media friends. So if you're on Twitter, if you're on Instagram, if you're on Facebook, if you're in a community of traders and you think this is going to be valuable for that community, do me a favor, spread the word. Don't be selfish. Show them some love too. All right, hope you guys enjoy. Let's hop into it. Here was the 2618 afterwards. Again, if we go back to our double top, we actually don't have a 2618. Nope. So technically we don't have a 2618 because we never do what, guys? Do we ever violate structure? We never get a lower low, lower close, no. So we don't have a 2618. Jagger says, what about the candlesticks that closed in the green box? So once we have this test right here, right? We never get a lower low, lower close. This becomes our low watermark of what needs to be violated in order to have a lower low, lower close. So the candles in the green box never violated this new low. So it's one of those instances where the wick forced us to push our violation point lower, just as we would for a normal kind of trend. And even though those candles in the green box break and close below that initial double bottom or double top V point, they don't close below the level that's actually required to have a new structure low. So we get that question a lot with normal trend. And it's also one of those things where you can say, hey, it could easily be one of those instances where you say rules don't actually agree with common sense. No, you don't move the V. You don't have to move the V, but you have to move the level that's required as a break and a close. So the V stays the same. That V is still the peak of your or the valley, whatever, of your double top. That stays the same. The area or the line, the price point that's required for you to have a violation is now moved lower because that V is no longer the lowest point. The lowest point has been moved by the candle to the right. Now, the cool part is about trading is If this bothers you and you're like, man, Akil, like I get rules and but this one doesn't make sense, you can simply change the rules, right? Where you can say, hey, I'm not worried about any extremes of price action. A violation for me is any break and close above or below the original point. So then if you do that, then no matter what happens, no matter what these funny little wicks do, this is your violation point. And then as soon as you get this right here, that would be your lower low, lower close. And basically you're ignoring kind of the stuff that happens. You just need to close below the original point. So you can that can be a rule you can make if you're not comfortable with these types of situations. Or she says, remember the foundation. Yeah, this is probably one of the most common questions I get. Because again, it's at least in my opinion, it's one of those situations where common sense and rules tell you two different things, which is just more proof that I always say, right? The market is not meant to follow our rules. Our rules are meant to give us the best opportunity at navigating the markets, but they're not perfect by any means. And there's going to be instances where your common sense is like, man, this isn't that, but your rules are like, it is. And you see the same thing in like sports. There was a MLB playoffs the other day. There was I think it was a ground rule double, and there was a player that was like already on third base before the ball even hit the ground, and common sense says he was going to score. Like there's no humanly possible way, unless he fell on his face or fell into some quicksand, that he was going to not score. But per the rules, right, they had to call him back and not count it. And it's like common sense was like, dude, this is the stupidest, like it's this, come on now. But the rules are the rules. You see that in other sports as well, where it's like they change it in soccer as well. If the handball, right? It used to be basically if you get hit in the hand, it's a handball, whether there is intent or not. Now it's a little bit more leeway because you saw people like would deflect off someone and hit them on their arm, and they're doing everything they can to avoid it, and they still get hit. And it's like, hey, handball. And it's like, come on, there was no intent for him to like hit it with his hand. But the rules are the rules. Common sense doesn't always line up with it. So it's like that in anything where interpretation is taken into account. Jagger says, that's how I was thinking of it, but I would rather do it properly. Sorry, I'm a little late. Which way do you see as properly? The first way or the second way? The second way? Okay. Well, why do you say that's properly? What makes that properly versus the first way? I would say properly is the first way. But I would also say, again, going back to the bigger thing, is there how you see it? Okay, so what is properly? So, but you're saying you'd rather do it the second way where this is the whatever point of new structure highness stays new structure high, whether there's basically not adjusting it to the highest wick, correct? Gotcha. Yep. There you go. So just make sure that's a consistent rule across the board. So if you have a situation where price action does this, and let's say there's a wick here. So this is your high watermark. So if you have a situation where price action does this and the candle wicks above but doesn't close above, and then we do something like this and that and then this, that you got to be consistent, and this has to count as your new structure high, correct? So that would be my advice. Or I guess, maybe, I don't know, what do you guys think? Can it be just I guess it can just be a specific rule only for 2618s, maybe? Can it be that way, or do you think it's better to be consistent across the board? Maybe it can be just a specific rule for 2618 opportunities. again, getting out of my own personal thoughts of consistency across the board. I always kind of go towards consistency across the board because I think it's going to lead to less confusion. But I suppose if it could be pattern specific, and just for the 2618, but you look at new structure highs differently. I don't know. Again, I'm screaming consistency across the board, but we all. It's not about how I think. It's about kind of what do we think is the best way. That's why I ask you. Looks like Hussein says consistency across the board. Orsi says across the board. Anyone else? Jimmy says easier for new traders across the board, stay consistent across the board. Jagger says in the trending situation I would agree, but for some reason I look at the 2618 situation differently. Well, how is there? So if we look at the principles of what we're trying to do, right? In both situations, we are trying to identify what? We're identifying the same thing. We're just looking at two different parts of the puzzle. But in both this situation and a 2618 situation, the key is to identify what? The key is to identify the violation of a level of structure, right? So with that being the goal, it's hard for me to separate one versus the other. If we're looking at the same thing in two different situations, but looking at them in different ways. But I mean, it is. Yeah, I suppose you can make it a specific rule. Yeah, I only do this for 2618s. It can certainly be a specific rule. So I don't have a problem with it. Not that it matters, but I think it could be a specific rule just for that situation. Because again, it's in order to be a rule, all you have to do is make it rules based, right? So when you write the rule, you can say, hey, in 2618 opportunities, this is what counts as a violation of structure, and just have that in a little kind of side note thing of your trading plan, so you know that, hey, this is how it works, but for this specific strategy. I think that's fine. I think it's fine to do that. And there was, I didn't mention this, there was some conversation looking back about Jason Grayson. I know he doesn't follow this rule, I believe. Let me just go back and read what came through. For example, Jason Grayson would ignore that wick on his trend continuation strategy, just changed rule. Yeah. So I remember hearing that before, where it says it is the way Jason reads his violation. So Jason doesn't see this. He, and you guys can correct me if I'm wrong. So he doesn't take into account moving the high watermark. He is stick to the original high watermark. Is that correct? Yeah. So you can see there's different ways you can do it. Different ways you can do it. All I can tell you is find a way that best fits your view on the market. And obviously, it comes down to being consistent in doing it. But it's now you're conflicted. Wait, it's got to go. And this is the hard part because so I know my philosophy on the market, right? I know my philosophy on the market. It is I need violations of structure. I need price actions to take out highs, to violate highs in order to be violations of structure. So for me, if we have a wick here, this is not a violation because this is still a zone that has been tested, right? This is a zone that has been tested and rejected, but not violated. So if this is the new kind of rejection zone, we need to violate this rejection zone for us to have a violation of it. If not, I can't count that as a violation of structure because we've proven to stretch the rubber band to that zone, but still bounce back. So I can't interpret it as it doesn't It doesn't compute to me. Like I can't look at something like this. I can't look at price action clearly being rejected in this zone. Right? Here, I can't look at this as being anything meaningful. Like, what is meaningful about this candle? Who can tell me? Does that candle, because that's the violation candle. That's the candle that violates this level. Does this give me any clue or any optimism about a violation at all? It doesn't. This is in all honesty, look, this candle is completely pointless to me. It means absolutely nothing. It does absolutely nothing. There's no type of signal. It means absolutely nothing because all it does is complete within the previous rejection candle. All this is another zone of support right here, where price action has been beaten down, rejected, and came back up. This is a bullish zone. And it's proven to be a bullish zone because look what we did. we bounced, we never violated and we bounced back up. So to look at this candle and for me to say, hey, this is a violation. This is something where, and for me, a violation is what allows me to make a prediction or a projection prediction, where a violation of a level tells me that, hey, I can predict that price action is likely to go lower. So the question I ask myself when I look at this candle right here is, does this candle allow me to predict that price? Like, does anything about this candle say that price is likely to continue lower? And I would ask you guys the same thing. Does anything about this candle tell you that price is likely to continue lower? If the answer is no, then what value does it serve? Is it purposeful? If it's a violation candle, it should have some value. What value does it give us? That would be my argument. Does it allow us to make any type of significant prediction? Do you see this and say, oh yeah, we're getting short? And if the answer is no, then why are we assigning value to it? That's the point that doesn't compute in my head. And I'm not saying my way is the right way, but I'm saying just based off my philosophy in the market, right? It just doesn't make sense. I can't assign it value. I want to see if I can find another kind of extreme example for you to make it make sense. But that's just where that's how my mind looks at something. I guess this can be looked at as this can be a similar example right here. Actually, this is a pretty good one, right? We look at how price action moved here, right? Swing high to swing low, correct? Before we retrace, yeah. Now we retrace, we eventually go lower, but this is our initial mark, right? Because we're not adjusting it. So again, we have a lower low, lower close right here. Is there any value in this candle? So I think that's what we have to kind of look at that's part of trading philosophy. It's easy for me to do it because I've been doing this for a long time, but as a newer trader, you don't necessarily have a philosophy yet. So I think those are the questions you need to ponder. I think those are the questions you need to look at when you're trying to make a decision about, hey, do I want to stick to this rule or that rule? And ask yourself, hey, what makes sense? And it's not what about, and the hard part is this. I think what we naturally want to do is we naturally want to make a rule based off what we ultimately want to do. So like, especially when we're in trading mode, if I want to get short here, I'm leaning towards making whatever rule would allow me to get short because I want to get involved in this 2618. Or if we don't want to get short, I'm leaning towards whatever rule allows me not to get short because I'm scared of getting in a trade. So we naturally kind of lean towards what we ultimately want to do. So what we have to do is we have to take a step back and we have to look at it from kind of a neutral perspective and not attach it to a trade, but attach it to just a general principle of reading price and ask ourselves, how do I actually feel about price? What are my views? And does this, again, I keep going back to the phrase, does it provide value? Because the only thing I'm looking at in the market, and you guys see this every day here in the live room, the only thing I'm looking at in the market is opportunities, situations, areas of the chart that provide value. That's why you see me go through charts real quick, right? You'll be like, I'll look at Aussie Canada and I'll be like, nothing, right? We got all these candles here, guys. But there's a difference between having candles and candles that actually provide value, right? We have all these cool candles, but there's nothing here that's actually valuable for me. There's some inside bars, but I'm not an inside bar trader, so it doesn't really mean anything to me, right? So when I go through charts and I'm looking at them, I'm looking at, okay, did we violate structure like dollar Canada, where once we violated structure, like yesterday, I was looking at this double bottom area and I'm like, there's no value in this for me because there's nothing relevant that has happened here. But now that we violated structure, okay, this is valuable because this single candle tells me that support has been taken out. Knowing that support has been taken out, it allows me to make a prediction that price is likely to go lower. Now it tells me something and allows me to make a prediction, where the majority of our candles don't tell us anything. Like most of the candles, 90% of the candles I would say on our chart are just pointless. Not point. I mean, they're all, you take everything into the picture, but it is a single letter in a word that is part of a sentence. It's a very small part. It plays a role. It has a meaning. I don't want to say that it doesn't have any meaning, but it's not really a game changer. It's just kind of it's something that leads up to something else. If you can imagine like your violations of structure being like plot twists in the story, right? Where that plot twist is where things get weird. It's like, oh no, plot twist. This is important. All the other candles are just kind of the dialogue leading up to that plot twist. Some will give you clues of potential plot twist. Some are just buying time to build up that story, and you can have the same plot twist if that candle or that word never existed. So it's something to think about. I'm not trying to convince you of my way. Again, I don't really care how you guys trade. I don't mean that in a negative way, but I mean that I just in general I want you to trade with the right principles as far as like understanding why you value what you value, understanding why you do what you do. The specifics of how you trade is up to you. I want it to match your personality and philosophy. But whatever you choose, whatever you do, make sure there's meaning behind it. So if someone asks you, hey, how come you don't count that as a violation? Or how come you do count that as a violation? You should be able to explain why. I think I just did a great job of explaining why and why it doesn't count for me. If you can't explain why something is meaningful or why something isn't meaningful, then it probably isn't meaningful. And that's something you need to reconsider. It's the same thing as like when people take trades and I'm like, hey, Cody, why are you looking for shorts in that reason? If Cody's like, well, we got previous structure looking left, RSI is overbought, we get a double top and blah, 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 blah. I may not agree with it, but Cody explained it. I'm like, okay, yeah, okay. Shoot, yeah. If I ask Cody the same thing, or I'll pick on Bobby. If I ask Bobby, hey, Bobby, why are you looking at that trade reason? Why are you looking to get short there? And Bobby's like, I don't know. Looks cool. Bobby hasn't really done a good job of explaining it, meaning Bobby probably doesn't really have an actual reason. So that's what I mean by it doesn't matter how or what path you want to take, but there needs to be a reasoning behind it.